Based on the historical data and forecast, Bitcoin exhibits a strong upward trend, consistently testing and breaching the resistance level of $104,100. The RSI indicates that the asset is approaching overbought territory, fluctuating between 66.0 and 77.2. However, considering the bullish momentum and the forecast predicting prices above $104,000, I recommend a long position strategy. We will use a combined strategy leveraging RSI and Bollinger Bands. The entry price will be $103,500. The stop loss will be set just below the lower Bollinger Band, at $90,400, to protect against a sudden downturn. The initial target price will be $105,300, aligning with the forecast for May 23, 2025. To maximize potential returns, we'll implement a dynamic target price strategy. If the price reaches $105,300, we will move the stop loss to the entry price of $103,500, securing profits while allowing for further upside. If the price continues to rise, we will set a second target price at $105,100, capitalizing on the anticipated bullish trend. This strategy combines the RSI's indication of potential overbought conditions with the Bollinger Band's confirmation of the prevailing trend, providing a balanced approach to capture significant gains while mitigating risk. The combination of these strategies provides a robust and efficient portfolio. Based on the historical data and forecast, Ethereum shows a strong upward trend. The price has consistently broken through resistance levels, and the forecast for the next week predicts continued growth. Considering the RSI readings, we've observed periods above 80, overbought, and below 20, oversold, indicating potential pullbacks. However, the overall momentum remains bullish. The Bollinger Bands have widened, suggesting increased volatility and potential for significant price swings. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels for optimal returns. Our strategy involves a long position with an entry price of $2,620. Given the recent upward trend and the forecast, we anticipate further price appreciation. The stop loss will be set at $2,540, just below the recent support level and the lower Bollinger Band, to limit potential losses. The initial target price is $2,750, aligning with the forecast for May 23, 2025. If the price reaches this target, we will reassess the situation and potentially extend the target to $2,800, capitalizing on the continued bullish momentum. This combined approach leverages the strengths of each indicator to maximize profit potential while mitigating risk. Based on the historical data and forecast, XRP shows a slight upward trend, bouncing between the support price of $2.16 and the resistance price of $2.58. The RSI fluctuates, dipping below 50 on several occasions, indicating oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. We will implement a combined strategy using RSI and Bollinger Bands to maximize potential returns. The primary strategy will be to buy when the RSI falls below 30 and the price touches the lower Bollinger Band, and sell when the RSI reaches 70 and the price touches the upper Bollinger Band. Given the current forecast, I recommend entering a long position on May 17, 2025, when the price is $2.45 and the RSI is below 30. Place a stop-loss order at $2.38, just below the lower Bollinger Band, to limit potential losses. Set a target price of $2.54, aligning with the recent resistance level and the upper Bollinger Band. If the price reaches $2.54, consider taking profits. If the RSI rises above 70, consider selling to secure profits. This combined strategy leverages both momentum and volatility indicators for a balanced approach. Based on the historical data and forecast, BNB shows a slight upward trend. The price has been fluctuating within the support of $637 and the resistance of $664. The RSI has been oscillating, recently reaching overbought levels, suggesting a potential pullback. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a moderately bullish strategy. we will initiate a long position when the RSI dips below 40, indicating an oversold condition. Specifically, we'll enter at $644. To mitigate risk, we'll set a stop loss at $637, just below the established support level. Our target price will be $651, aligning with the recent forecast and a reasonable profit margin. To refine this strategy, we'll incorporate Bollinger Bands analysis. If the price touches the lower Bollinger Band, it reinforces the oversold signal and validates the entry point. If the price approaches the upper Bollinger Band, we'll consider taking partial profits to secure gains. For example, if the price reaches $651, we'll close half of our position and move the stop loss to our entry price of $644 to protect the remaining gains. This blended approach, combining RSI and Bollinger Bands, offers a balanced risk-reward profile, maximizing potential returns while minimizing downside exposure. This portfolio will be the most efficient of the three strategies. Based on the historical data and forecast, Solana exhibits an overall upward trend, consistently bouncing off the $150 support level. The RSI fluctuates, reaching overbought levels above 80 and oversold levels below 20, suggesting potential short-term pullbacks and rebounds. The Bollinger Bands indicate periods of increased volatility followed by consolidation. Considering this, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position at $172, coinciding with a forecast price and a slight dip within the Bollinger Bands. A stop loss will be placed at $167 to protect against potential downside risks, and a target price of $183, aligning with the established resistance level, will be set to capture the upward momentum. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, we will consider adding to our position at $173, with a stop loss at $169 and a target price of $177. Conversely, if the RSI exceeds 75, suggesting an overbought condition, we will consider taking partial profits at $174. This tiered approach, combining trend analysis, Bollinger Band signals, and RSI confirmations, aims to maximize returns while mitigating risk. The portfolio will be weighted 60% towards the initial long position and 40% towards the RSI-driven adjustments, ensuring a balance between capitalizing on the primary trend and reacting to short-term fluctuations. Based on the historical data and forecast, Dogecoin shows a mixed trend with periods of volatility. The recent upward movement from $0.17 to $0.251 indicates potential bullish momentum, but the subsequent pullback to $0.219 suggests caution. The forecast prices for the next week hover around $0.22 to $0.23, indicating a potential consolidation phase. Considering the RSI values, the asset has recently entered overbought territory, with values exceeding 80, suggesting a potential pullback is due. The Bollinger Bands show that the price has recently touched the upper band, further reinforcing the possibility of a short-term correction. Therefore, I recommend a strategic portfolio combining RSI, Bollinger Bands, and support/resistance levels. We will initiate a short position at $0.233 with a stop loss placed at $0.235 to protect against unexpected upward movements. The target price for this short position will be $0.22, capitalizing on the potential pullback indicated by the RSI and Bollinger Bands. Simultaneously, we will set up a long position at $0.22, with a stop loss at $0.219. The target price for this long position will be $0.241, aiming to capture the upward momentum if the price bounces off the support level of $0.182. This dual strategy aims to profit from both potential corrections and rebounds, maximizing returns while managing risk. Based on the historical data and forecast, Cardano shows a slight upward trend. The RSI fluctuates between 46.9 and 73.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Given the current RSI of 54.1, which is approaching the oversold level of 20, and the forecast predicting prices around 0.76 to 0.79, I recommend a long position. The entry price should be $0.758 with a stop loss placed at $0.722, near the support price, to limit potential losses. The initial target price is $0.795, aligning with the first forecast price, offering a quick profit. To maximize returns and manage risk, I suggest a tiered target strategy. After reaching $0.795, move the stop loss to break even, protecting the initial investment. If the price continues to rise, the next target is $0.83, the resistance level. If the price reaches $0.83, consider taking partial profits and moving the stop loss higher. This approach allows us to capitalize on the upward trend while mitigating downside risk and adapting to changing market conditions. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced and potentially high-return investment approach. Based on the historical data and forecast, TRON shows a generally upward trend with some volatility. The RSI consistently fluctuates above 50, indicating bullish momentum. However, it has recently approached overbought territory, nearing 80, suggesting a potential pullback or consolidation. The Bollinger Bands show that the price has been moving within the bands, with recent price action nearing the upper band. Considering these factors, a strategy combining RSI and Bollinger Bands is recommended. We will implement a strategy focused on capitalizing on short-term pullbacks within the prevailing uptrend. The entry price for this strategy will be $0.272, triggered when the RSI falls below 60 and the price touches the bottom of the Bollinger Bands. The stop loss will be set at $0.266, just below the support price, to mitigate potential losses if the price reverses. The initial target price will be $0.274, aligning with the forecast price and the upper Bollinger Band. If the price reaches this target, we will reevaluate the situation and potentially extend the target to $0.275, the resistance level, for further gains. This strategy aims to capture short-term gains while managing risk effectively. Based on the historical data and forecast, Sui shows a generally upward trend, bouncing between support and resistance levels. The RSI fluctuates, indicating periods of overbought and oversold conditions, but largely remains above 60, suggesting a bullish sentiment. The Bollinger Bands have been widening recently, indicating increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $3.94, coinciding with a slight pullback and a potential bounce from the support level of $3.56. A stop loss will be placed at $3.79, just below the recent low, to protect against potential downside risks. The initial target price will be $4.04, aligning with the forecast price and the upper Bollinger Band. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll enter a long position at the prevailing price, with a stop loss at $3.56 and a target price of $4.06. Conversely, if the price touches the lower Bollinger Band, we'll enter a long position at the price, with a stop loss at $3.56 and a target price of $4.04. Combining these signals, the most efficient portfolio will prioritize long positions when the price is near the support level or the lower Bollinger Band, with a stop loss at $3.79 and a target price of $4.04, adjusting to $4.06 if the RSI confirms an oversold condition. Based on the historical data and forecast, Chainlink shows a clear upward trend. The price has consistently bounced off the support level of $15.1, and the forecast predicts continued upward movement, albeit at a slightly slower pace. The RSI readings have fluctuated, but generally indicate strengthening momentum, with brief periods of oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility and potential for significant price swings. Considering these factors, I recommend a long position strategy. We will enter a long position at $16.3, coinciding with a slight pullback in the forecast. A stop loss should be placed just below the support level at $15.1 to mitigate potential losses. The initial target price is set at $17.4, aligning with the previous resistance level and a reasonable profit margin. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop loss at $15.1 and a target price of $17.4. Conversely, if the price touches the upper Bollinger Band, signaling an overbought condition, we will consider exiting the position or taking profits. However, given the overall upward trend, we will prioritize the long position strategy. Therefore, the final portfolio will be 70% long position at $16.3 with a stop loss at $15.1 and a target price of $17.4, and 30% waiting for RSI signal to enter the market. Based on the historical data and forecast, Dogecoin shows a mixed trend with periods of volatility. The recent upward movement from $0.17 to $0.251 indicates potential bullish momentum, but the subsequent pullback to $0.219 suggests caution. The forecast prices for the next week hover around $0.22 to $0.23, indicating a potential consolidation phase. Considering the RSI values, the asset has recently entered overbought territory, with values exceeding 80, suggesting a potential pullback is due. The Bollinger Bands show that the price has recently touched the upper band, further reinforcing the possibility of a short-term correction. Therefore, I recommend a strategic portfolio combining RSI, Bollinger Bands, and support/resistance levels. We will initiate a short position at $0.233 with a stop loss placed at $0.235 to protect against unexpected upward movements. The target price for this short position will be $0.22, capitalizing on the potential pullback indicated by the RSI and Bollinger Bands. Simultaneously, we will set up a long position at $0.22, with a stop loss at $0.219. The target price for this long position will be $0.241, aiming to capture the upward momentum if the price bounces off the support level of $0.182. This dual strategy aims to profit from both potential corrections and rebounds, maximizing returns while managing risk. Based on the historical data and forecast, TRON shows a generally upward trend with periods of consolidation. The price has been fluctuating within the support of $3.07 and the resistance of $3.18. The RSI indicates that the asset is currently not in oversold or overbought territory, fluctuating around the 45 to 65 range. The Bollinger Bands have been widening, suggesting increasing volatility. The forecast predicts a slight downward trend in the short term, potentially reaching $2.98. Therefore, I recommend a moderately conservative strategy focusing on short-term gains while managing risk. I propose a strategy combining RSI and Bollinger Band signals. We will enter a long position at $3.07 when the price touches the support level and the RSI is below 45. The stop loss will be set at $2.99, just below the forecast low. The initial target price will be $3.18, the resistance level. If the price reaches $3.18, we will move the stop loss to the entry price of $3.07 to secure profits and potentially ride the upward momentum if it continues. This strategy aims for a quick profit while protecting against downside risk, given the predicted short-term downward pressure. Based on the historical data and forecast, POL/Xmatic shows a mixed trend with periods of consolidation and upward movement. The RSI fluctuates between 48.2 and 73.5, indicating both oversold and overbought conditions. The Bollinger Bands suggest periods of volatility and potential price reversals. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. The strategy will involve a long position with an entry price of $0.237, coinciding with a recent dip and potential support near the $0.235 level. A stop loss will be set at $0.22, just below the lower Bollinger Band, to mitigate potential losses if the price declines further. The target price will be $0.27, aligning with the upper Bollinger Band and a previous resistance level. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, we will enter a long position at $0.235 with a stop loss at $0.22 and a target price of $0.27. Conversely, if the RSI exceeds 80, indicating an overbought condition, we will consider exiting the long position or shorting. The forecast data suggests a slight downward trend initially, followed by a potential rebound. Therefore, the initial long position at $0.237 offers a favorable risk-reward ratio, capitalizing on potential upward momentum while safeguarding against significant losses with a well-defined stop loss. This combined approach leverages both technical indicators to maximize profit potential and minimize risk. Based on the historical data and forecast, NEXO shows an overall upward trend with recent price fluctuations. The RSI values hover between 61 and 70, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest increasing volatility, with the price occasionally touching the upper band. Considering the forecast, the price is expected to rise to $1.34. Therefore, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 65 and the price touches the bottom Bollinger Band. Specifically, I suggest entering a long position at $1.17. Set a stop-loss order at $1.11, just below the support price, to limit potential losses. The initial target price will be $1.29, aligning with the upper Bollinger Band. If the price reaches $1.29, we will move the stop-loss to the entry price of $1.17 to secure profits and further reduce risk. A secondary target price will be $1.34, based on the forecast. This portfolio combines RSI and Bollinger Band strategies to capitalize on the upward trend while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a strong upward trend, particularly evident from May 8 onward. The price has consistently tested and bounced off the support level of $0.946, while the RSI has frequently entered oversold territory below 30 before rebounding. The Bollinger Bands have widened, indicating increased volatility and potential for significant price swings. The forecast for the next week suggests continued, albeit slightly muted, upward momentum. Given this, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. The primary strategy will focus on capitalizing on short-term pullbacks to the lower Bollinger Band, aiming for entries when the RSI dips below 30, signaling an oversold condition. Specifically, I recommend a long position entry at $0.977, coinciding with the first forecast price and a dip towards the lower Bollinger Band. The stop-loss should be placed just below the support level at $0.946 to protect against a potential reversal. The initial target price will be set at $1.18, the recent resistance level, offering a substantial profit margin. If the price reaches $1.18, we will move the stop-loss to break even to secure the profit and allow the position to run further. If the RSI reaches 80 or higher, indicating an overbought condition, we will consider taking partial profits and tightening the stop-loss to the center of the Bollinger Bands to protect against a potential correction. This dynamic strategy balances risk and reward, capitalizing on the prevailing upward trend while mitigating potential losses. Based on the historical data and forecast, Ethena shows a volatile trend with recent upward momentum. The RSI fluctuates above and below 50, indicating periods of both buying and selling pressure. The price has consistently found support around $0.367, while resistance has varied but recently been around $0.455. The forecast for the next week suggests a continued, albeit slightly decreasing, price movement, hovering around $0.36 to $0.38. Considering these factors, a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels is recommended. The strategy involves a long position entry at $0.364, coinciding with the forecast price and the recent support level. A stop-loss will be placed at $0.36, just below the support, to limit potential losses. The initial target price is set at $0.38, aligning with the forecast price and the upper Bollinger Band. If the price reaches $0.38, a trailing stop loss will be implemented at $0.37 to secure profits while allowing for further upside potential. If the price breaks below $0.36, the position will be closed, cutting losses. This approach combines the momentum of the upward trend, the support and resistance levels, and the signals from the RSI and Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Compound exhibits a generally upward trend with periods of consolidation. The RSI values fluctuate, indicating periods of overbought and oversold conditions. The Bollinger Bands show that the price has recently been trading near the upper band, suggesting a potential for a pullback. Considering these factors, I recommend a strategy that combines RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 40 and the price touches the lower Bollinger Band, indicating an oversold condition. Specifically, let's enter a long position at $44.8. To manage risk, set a stop-loss order at $44.2, just below the support level. For the target price, we will aim for a conservative gain based on the recent resistance levels. Let's target $48.4, which is the previous resistance price. This provides a reasonable profit margin while acknowledging the potential for further upside. The strategy will be adjusted daily based on the RSI and Bollinger Bands readings. If the RSI consistently remains above 60, or the price breaks above the $48.4 resistance, we will reevaluate the position and potentially adjust the target price or consider taking profits. This approach balances risk management with the potential for high returns, capitalizing on the overall upward trend while mitigating downside risk with carefully placed stop-loss orders. Based on the historical data and forecast, Aave demonstrates a clear upward trend, consistently testing and breaking through resistance levels. The RSI consistently fluctuates above 50, with periods above 70, indicating bullish momentum. The Bollinger Bands have widened, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. Specifically, we will enter a long position at $236. Given the upward trend and forecast, a reasonable stop-loss would be set slightly below the recent support, at $229. The initial target price will be $248, aligning with the forecast for May 23, 2025. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider adding to our position at the prevailing price, with a slightly adjusted stop-loss. Conversely, if the RSI reaches 80 or above, suggesting an overbought condition, we'll consider taking partial profits at $244. The core strategy remains a long position with an entry at $236, a stop-loss at $229, and an initial target of $248, adjusted based on RSI and Bollinger Band signals for optimized risk-reward. This approach balances trend following with tactical adjustments to maximize returns. Based on the historical data and forecast, EOS shows a mixed trend with periods of both upward and downward movement. The RSI fluctuates around 60, occasionally reaching overbought, above 80, and oversold, below 20, levels, indicating potential short-term volatility. The Bollinger Bands have widened recently, suggesting increased price fluctuations. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals for enhanced accuracy. We will initiate a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, let's enter a long position at $0.821. Given the recent price action and forecast, our stop-loss should be set slightly below the lower Bollinger Band at $0.79 to protect against unexpected declines. The initial target price will be the resistance level at $0.926, offering a substantial profit potential. If the price reaches $0.926, we will reevaluate the situation and consider raising the stop-loss to protect profits. If the RSI rises above 80, we will consider taking partial profits at $0.881 and moving the stop-loss to break even. This dynamic approach aims to maximize returns while mitigating risks associated with EOS's volatility. Based on the historical data and forecast, KAITO demonstrates a clear upward trend, particularly noticeable from May 10 onwards. The price has consistently tested and bounced off the support level of $1.38, and the RSI has mostly remained above 50, indicating strengthening momentum. The forecast for the next week projects continued growth, with prices hovering around $1.8 to $1.9. Considering the current price of $1.93, I recommend a long position with a focus on capitalizing on this upward momentum. We'll employ a combined strategy using RSI and Bollinger Bands. My strategy involves entering a long position at $1.83, coinciding with the first forecast price. The stop loss will be set just below the support level at $1.38, specifically at $1.36 to mitigate potential downside risk. The initial target price will be $1.97, aligning with the forecast high for the week. If the price reaches this target, we will adjust the stop loss to break even around $1.83 to protect profits and allow for further gains. If the RSI reaches 80, indicating an overbought condition, we will consider taking partial profits and tightening the stop loss. This dynamic approach allows us to benefit from the predicted upward trend while managing risk effectively.